Good morning, everyone. It is May 15th, halfway through May. Wow. And we had inflation data this morning, right? So, huge pop on this inflation data, right? As it seems like fears of creeping up inflation are starting to get subdued. So, remember that we were looking, well, we weren't looking, but we saw that inflation readings were getting a little spicy over the last few months here, right? They were ticking up slightly. And it was causing everyone to think, okay, is the central bank ever going to reduce this benchmark rate, right? Or is it going to reduce it at all this year? So we got another glimpse of the inflation picture today. We got that inflation data, the CPI that came out today. January, February, and March CPI reports came in hotter than expected, and central bank officials were hammering home the higher for longer message that includes yesterday's speech from Jay Powell himself, who reiterated to look at the wait and see approach. So the Fed will need to be patient and less restrictive on monetary policy to do its work, he declared, adding that my confidence is not as high as it was, but expects inflation to move back down on a monthly basis to levels that were more like the lower readings that we were having last year. So there we go. We got that inflation data that came out. Let's take a look at some of these numbers. The US CPI year over year, last time around it was 3.5. The expected was 3.4, so a small downtick. And boom, we got 3.4. The month over month was expected at 4/10. The prior was 4/10, and boom, we got 3/10. The core CPI year over year, 3.8 last time, 3.6 expected, and we got that expectation, so lower from that. And then the US core CPI month over month, 0.4% expected, 0.3, and we got those 0.3. So the inflation readings dropped off, well, came in line with expectation, but dropped off from the previous readings, which is great, right? That's great for the markets, and the markets took that as a sign of just let's pump this thing up, let's juice this up, let's spark that rally, and we got a very significant pop. Even yesterday into the close, right? Was inflation data leaked? I don't know, but there was a nice ramp into the close as the bull side approaches very close to all-time highs here on the futures equity markets. Right, as we look at some of the indices, I think they have made intraday all-time highs, if I'm not mistaken. But damn, it's been a very aggressive pop here. And today, right, could we be in for an all-time high? The S&P's all-time high on the futures is around like 53.35 or something. We're not too far away from it, right? We're trading very close to that 5,300 level, and there are reasons to look for some of that upside continuation. I'll mark off, right? We'll talk about the plan for today, but speculatively, it's very hard to be short, right? It was hard to be short yesterday for too long. It's hard to be short right now as we're above a lot of these distribution areas, and we'll take a look at that as well. So first and foremost, well, actually, why don't we even look at it right now? So as we're looking at this, we've accepted into distributions higher, right? We're now above that 52.70 area, which moves up into these blocks. Above 52.90 on the S&P 500 futures, I think it's going to be a very difficult battle for the shorts, right? We'd have to move away from these imbalances under if there's going to be any kind of sell. Even at that like low 52.70 area, I'm still going to be probably looking for some longs to swing it back up. But trying to short this without any construct on the sell side, any reaction on the sell side, is going to be a very tough battle in my opinion. So keeping that in mind as we go forward, it's today might want to be one of those days where we get a continued upside rally, and people who just continuously short and short and short are going to get stopped out, right? You need to have a clarified and defined area as to where the shorts might win, so you can kind of respect those areas, right? There's no reason right now to just keep hammering short, trying to find a high on this until there's some kind of imbalance break. So we talked a bit about this yesterday, but as we can see, right, the meme stocks are back, right? They've revived themselves. GME's down a bit here pre-market, but the meme trade, right, is continuing for nearly the third day in a row. We'll see how it pans out today. Multiple halts over the last few days here on GME, AMC, right? The big names are notching smaller gains in the pre-market session. Right now, GME and AMC saw combined 37 volatility trading halts. 37 halts in a matter of a few days on Tuesday, right? So closing 60% and 32% up respectively after Keith Gill, known as Roaring Kitty, tweeted for the first time in nearly 3 years. GameStop also climbed near the top of Interactive Broker's weekly list of most active assets on its platform, with many looking to make money off GME options. So it's at that point where a lot of people are piling in on the long side as we're starting to kind of pull lower. I don't know. I'm not very on the meme front, right? I'm not very in with these memes, if you will. So let this volatility play out. I know that options, the IV is extremely high, so you're overpaying drastically for whatever options you have. A lot of people are trying to sell options on these to collect that premium, but again, that becomes a risky game based on what's been going on. So, in other news, right, streaming services crowd the market. They are now racing to form an alliance that offer choice and value for customers. The latest is Comcast, which will launch a new streaming bundle that will include Peacock, Netflix, and Apple at that vastly reduced price. That's everyday pricing, not an introductory pricing. So Comcast CEO Brian Roberts announced that the Stream Saver bundle will now be available this month. Disney, Warner Bros., right, Discovery unveiled their own streaming bundle only a week ago, following their partnership with Fox and joint sports streamers. So, could be a little more activity in those names, but right now, there's a lot of news that's going to be hitting today. A lot of news on the wire as we know it, and we've got, after this market opens, business inventories, housing market index, EIA petroleum inventories, Feds Kashkari and Bowman are going to be speaking in the afternoon, and then we got Treasury International Capital. So, a lot of news that's flying around, a lot of volatility right now, a lot of market movement, and we want to be wise with the positioning that we take. So as we've seen multiple days, even a few weeks of lower volatility trading, lower volume trading, now is quite a different move, as we have over 200,000 contracts traded here pre-market going into the open, probably getting about 250,000, which is a lot more than what we've seen so far. So I want to stay diligent. I'm going to be trading a little smaller size to start the day and wait to see where the actual imbalances hold. So as long as we can stay above that 52.90 and there's buyers that keep hammering it, right, I don't really have a choice but to look for some of this long side continuation. So with that being said, don't go crazy today. Don't try to continuously short a market if there's no real selling, right? We're very close to all-time highs. It wouldn't be bad if we just go and touch them and then see what happens. So with that being said, I hope everyone has an amazing trading day. Check out community.tradeproacademy.com, and we'll do this again tomorrow as we're nearing the end of the week. So thank you, everyone. We'll chat soon, and let's see how this market plays out today as we open up our live room.